Hey guys, how's it going? Welcome back to the channel. Having difficulty in maintaining your finances? Worried about the mounting pile of unpaid bills and debts? Because we're here to help you out of this misery. Stop assuring yourself that things will be okay if you just ignore it and start making your own financial plan today. It surely takes some perseverance, but is definitely not that hard. To make it easier, here are 10 steps to create a solid financial plan for yourself. Step 1. Determine where you stand and make smart financial goals. Just like any other plan, you first need to realize your current position. Knowing where you stand will give you a starting point. Second most important thing is to set SMART, specific, measurable, achievable, relevant, time-bound financial goals. Just like the stick and carrot approach, put the goals in front of you and then decide the steps to take in order to achieve them. SMART goals help you break your extensive goals into smaller chunks that are easy to measure and achieve. Number 2. Update your budget. You don't have to spend all the money on your desires or wants. To live a decent life and still be able to save money for the future, you need to create a budget. The best way of budgeting is the 50-30-20 rule, i.e. 50% for essentials, 30% for wants, and 20% for savings. It's important that you keep updating your budget according to your goals. Step 3. Plan for taxes. Yup, taxes. Taxes are annoying, but they're certainly not going away anytime soon, so make sure your long-term income projections include taxes. Not planning for taxes can impact your cash flow in a major way. In addition, you definitely want to look into tax savings investment options and stay up to speed on any relevant tax deductions you can apply to help you save money on your tax payments. Step 4. Start saving for emergencies. It's like saving money for rainy days on sunny days, rather than depending on others to lend you an umbrella when it actually rains. With so many people living paycheck to paycheck, it's difficult for 4 in 10 people to cover an unexpected expense of $400. But by saving for emergencies in present, you can live today and also save for tomorrow, and enjoy tomorrow's present while saving for another tomorrow. It's the best way to save oneself from debts. With this, we move on to our next step, which is about how to manage debts for a secure financial plan. Step 5. Manage debt. When you are used to living from paycheck to paycheck, it could be frustrating when you have to return a large sum of debt or many small debts, or a combination of both. There are 2 significant methods for the replacement of debt: debt snowball method and debt avalanche method. In debt snowball, you prioritize smallest debts first, whereas in debt avalanche method, you make minimum payments in all loans and use the leftover money to pay off the highest interest rate loan first. No matter which option you choose, the point is to successfully pay off the debt and stick to the plan. Number 6. Create plan for insurance. After working so hard to earn your money, the last thing you want is an unexpected situation to wipe you out. That's where your insurance comes in. Insurance is a financial safety net, helping you and your loved ones recover from unexpected circumstances that require a large amount of money to resolve, such as a fire, theft, lawsuit, or car accident. Insuring your assets is more of a defensive financial move than an offensive one. When determining how to create a financial plan, you want to have insurance to protect yourself from any unforeseen difficulties that could hinder your success. Before moving on to the next step, to build a successful financial plan, if you're enjoying this video, make sure to like and comment below. Number 7. Invest, have more than one source of earning. With rising inflation and limited paycheck, it's difficult to fulfill your necessities and desires. And when you are finally done with necessities and desires, no money's left for savings. According to Warren Buffett, CEO of Berkshire Hathaway, never depend on a single income. Make investments to create a second source. The only problem with investment is that it takes some time to bear results, but it's fruitful for long-term financial success, so consider budgeting a set amount each month to go directly into your investment portfolio. Number 8. Plan for retirement. While retirement might seem like a lifetime away, it's never too early to start. The earlier you start saving for retirement, the better. If you start saving for retirement in your 20s, you'll have 30+ years of consistent contributions for your retirement fund. However, a good rule of thumb is to save around 10 to 15% of your post-tax income annually in your retirement funds. Step 9. Estate planning. Estate planning is what people usually ignore, but it's very important, as it deals with what happens to your assets when you're gone or incapacitated. To create an estate plan, you should list your assets, write your will, and determine who will have access to the information. Step 10. Review your progress every month. Figuring out how to create a financial plan isn't a one-time thing. Your goals and your financial standing aren't stagnant, so your plan shouldn't be either. It's essential to reevaluate your plan periodically and adjust your goals to continue setting yourself up for success. These are the 10 steps through which you can make a solid financial plan. If you like this video, make sure to check out more exciting videos on our channel. And also don't forget to subscribe to our channel and ring the notification bell.